Boom! Happy Monday. What is up, Zinger Nation? Hope everyone out there had a great weekend. We are back. The markets are open, but honestly, today, maybe we wish they would have just kept them closed because we are leaking after last week's strong week. The S&P 500 currently down almost exactly 1%. The Qs down 1.87%, almost 2% on the Qs. So tech definitely showing some weakness today. Your Dow, I don't know who really cares about the Dow, but in case we've got any boomers out there, I'll go ahead and tell you what the Dow is doing anyway. It is down 0.38%, your Dow Industrial Average. Bitcoin is hanging out down about 2% on the day, hanging right out there at the $20,000 level. So I'll be watching Bitcoin this week to see if it is able to hold that important psychological level. If we dip again below that $20,000 level, I don't know. I mean, that's gonna be a few times now we've gone below that level. So definitely some potential more pain there for Bitcoin in the crypto markets. But let's go ahead and get that intro rolling, get the show started. We've got a good Monday plan. We're going to preview the CPI and inflation data coming out on Wednesday, seeing what exactly the Fed is looking for, what investors are looking for, seeing both the bull case and bear case, seeing how we can play that number coming out on Wednesday. And then Jason from TrendSpider will be joining us instead of Jake Wujastic today. So excited to get Jason on the show because it's been a minute since he's been on. And as always, let me know in the chat what stocks you guys are watching, what trades you guys are watching, and we'll take a look at those. Go ahead and smash the like, and let's roll that in.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastic from TrendSpider. We have a
breaking news. All right, guys. First stock I got to check out today, SimpQ. Yep, this one is for all the simps out there. We were watching this last week. Just had a crazy run from like 2 cents to $3. I want to say it was up 20,000% at one point, hit highs of 385, now trading back to 15 cents. So this is one of those cases where, look, I mean, if you're trading these penny stocks and you got in for whatever reason, you got lucky and you got in on that initial move, maybe you saw it run from from 2 cents to 5 cents. It was already up more than 100%, and you bought some at 5 cents because you said, who cares, screw it. And then it went to $1, went to $2, went to $3. Great. But this is one of those cases where if you see a stock running like this, especially if it's as cheap as this one, I mean, chances are you've missed it. I saw this at $2.50. I think the first time we started talking about this stock on the show, literally we brought it up as it was running, and within 5 minutes of us bringing it up, it had ran another 30%. I was sitting there thinking, oh, shoot, I should have just bought some. But this is more what happens more often than not. If you buy one of these penny stocks that has already run, you will get burned. You will get stuck holding the bag. So I don't know. I'll let you know this week if we see some more interest on benzinga.com for SimpQ. But yeah, right now, not showing its legs. Sorry, guys, just catching up with the chat. Yes, Shelly, the chart. I'm trying to will the markets back to green today. Usually when I wear this shirt, it can help out. Let's go check out on the Qs again. Down 1.86. So we're looking here on a daily chart. You can really see kind of this double top forming. We hit the spot almost exactly twice, right at 296, and rejected both times. So I'm curious if we come down here, kind of, this would be a good level for me, 272. So I'll give you guys my game plan for Qs right now. And again, this is not investment advice or anything like this. This is just how I'm kind of playing the major indices right now. I've been saying this on the show, and I'm going to continue saying it till I'm proven wrong. But I do expect there to be some more weakness in the overall markets over the next couple weeks. I really think here in the next, we'll say 3 weeks or so, as we continue to get more earnings coming out, we could really see that earnings contraction and see some of these biggest stocks, whether it's, let's look at when all these companies report, right? So Apple reports 7/28. So that's July 28th. It's July 11th right now. So almost in 2 weeks, here in about 2 weeks in a couple days. Tesla is a week before that on 7/20. Microsoft is 7/26. So I think that whole week from the 20th to the 27th, we'll say, is when we get all of the biggest earnings. And I don't really expect those to be strong earnings reports. So I don't want to go out here and rush and buy the Qs right now, even though we had a pretty strong week last week. Just because if I buy right here at 264, right, and then we get some of those poor earnings reports and drop back down to 243, now I'm down 8% on my position right out the gate. When I'd rather wait till we get those earnings reports. And guess what? If I'm wrong and the Qs are doing well, and then we're even in more of an established uptrend, and it looks like we have seen that bottom, then I'll buy then. And I won't really care about buying into strength, because we'll still be, about 20% off of our all-time highs of 350. So I will not be worried if I miss out on a few percentage points there by waiting. I'd rather have that kind of risk set aside and have that cash on the sideline for if we do get that bigger breakdown when those earnings reports come out, then I can get in and have a nice little entry point. Shelly saying great day for your short. Shelly, let us know what you were short. Good trade being short into today. Sorry, guys. I'm just chatting with Zunaid real quick. I think Zunaid might hop on with me for a few minutes, talk about some trades. But let's go ahead and pull up the CPI data. So I'm going straight to the Fed economic data website. And we're just looking at the CPI right here. And so what I'm going to be looking for a CPI that comes out on Wednesday. This will be Wednesday morning before the open. One of the biggest things here, wait, let me get the May 2022 CPI Fred. Here we go. I'm trying to find the sheet where it's broken down into exactly the. Let's try this. Nope. I'm trying to find where it's broken down by which goods were driving the CPI. Let's try going back to this we were on. Here we go. Man, but they don't have it they don't have the percentages broken down. All right, let me show you guys what I'm looking at right here. So this is showing us monthly seasonally adjusted for all different items, right? And what I'm really curious about here is looking at energy. So fuel, oil, and other fuels. Let's see, is this no, motor fuel. All right, here we go. So in this column, we're going to be looking at May 21. So this is a year ago. And then on the far right column is 1 year ago, the price. The far left column is what was the price for May 2022. So that's what we care about the most is that year over year inflation. So gasoline, all types, went from 250 to 272 or 372. Sorry. So what you can see here is from April. This was April 2022. This middle column that I have highlighted right here to May, we saw a pretty significant increase here. And if you compare that to other categories, it's not really the case. So if you look at, footwear, for example, 143 to 144. So slight increase. Women and girls apparel, 104 to 105. Men's and boys apparel, actually barely any inflation at all from there. And that's from April to May. And my point in bringing this up is that when you're going through some of these different categories, what you can really see is that the inflation did not grow that much from April 2022 to May 2022 in basically any categories from a substantial amount outside of gasoline and motor fuel. And that, of course, leads to higher, inflation in air travel and for public transportation. So you can see right here, airline fare went from $298 to $336. So you definitely see a big increase there. That's more than almost 10% month over month. So certainly a big move there, but you can really see it in the gasoline and travel prices. So that will be the biggest thing looking at the CPI that's coming out on Wednesday. Are these prices, the gasoline prices, the airline fares, able to come down, and they don't even necessarily need to come down. What you need to see is just not for them to rise as much. So if it goes from 372 to 375 and we're not seeing that big, almost 5 to 10% increase, then what I foresee is a very mild CPI print. And I think by looking at, we've looked at the AAA gas prices website a few times now on the show. And it seems like every time we check on it, it's just ticking a little bit lower. So, right, if we look here, yesterday average 468. Now it's 467. Well, it's still 468 if we're rounding up that decimal, but still lower than it was yesterday, lower than it was a week ago, lower than it was a month ago. So if this is the biggest thing we're looking at, gasoline prices in terms of inflation, and all the data we have out there is that it's actually getting cheaper from a month over month basis, then I think that's pretty good news in terms of CPI, that we're more likely to see a mild CPI print. Now, what you have to take into account is that for the first, let's say, I don't know if I want to say half of June, but at least the first 10 days or so, gas was continuing to rise. I think we hit that peak in terms of, record breaking, expensive per gallon gasoline prices on June 10th or so, around there. And then from there, gas prices really started to come down. But like I said earlier, you don't even necessarily need prices to come down for inflation to come down. You just need prices to stop rising. So even if gas was if it was $5.04, exactly what it was a month ago, then inflation would be lower for gas because it's not rising. It's just staying the same. So inflation would be zero. But what we're seeing now is actually deflation in gas. You're seeing the price come down. So that deflation will be taken into account into the CPI. And in terms of actual Fed policy and what the CPI means, I don't really foresee the Fed even really switching tone or talking about, becoming more dovish or anything like that as we get lower CPI rates. I think we'll need to see, before we see the Fed willing to kind of adjust its course on rate hikes and maybe get a little more dovish, we'll need to see months and months of months, maybe 3 to 4 months in a row of lower inflation to really say, okay, runaway inflation is dead. Now we're coming down to a more reasonable spot. I don't think it's going to be like, oh, we see one CPI data for June that looks good. Now we can start talking about, lowering those rates. But with that said, if we do get a really low, CPI number, and I think the expectations right now are 8.4 or something like that for Wednesday, and if it comes in at, say, 7.2 or 6.5, or it's way under, what Wall Street will see is, okay, maybe this is a sign we're getting closer to that point where then the Fed can kind of switch and get more dovish. So I don't have any crazy, visions of, oh my God, we need one print, and the next thing you know, the Fed's talking about cutting rates, and then we're back at all-time highs. That's not what I'm saying. But I'm saying if we do get a lower CPI than expected, then some investors on Wall Street will think we're a little bit closer to that point. We're a little bit closer to that point to where the Fed can then even start talking about dropping those rates. So that's just where all kind of eyes for investors this week will be, at least until Wednesday, will be on that CPI number, because certainly the Fed's biggest concern right now is inflation. And I don't think, even with everything going on in the housing market, even with everything going on with potential, layoffs in the crypto industry or layoffs in the tech industry, I don't think the Fed is really worried about anything else right now other than slowing down inflation. And the problem with letting inflation run, even if you're getting lower unemployment and these other economic indicators that are actually pretty good, is runaway inflation can really switch and adjust consumer demand and consumer behavior for a long time, right? If you look at any period in US history where we've had runaway inflation for more than a year, for more than 2 years, it's really affected how consumers have spent money for years after that. And the Fed knows that that is bad for the economy in the long run. So they want to do what they can to right now quell inflation, bring it down. And then once they do that, okay, then you can turn the money printer back on. Now we can try to get, that unemployment number back lower. But looking at this chart, or looking at this map for gasoline, it is bullish in the sense that just from a CPI standpoint, it looks like we will get some relief here on the gasoline portion of the CPI, which again was your biggest driver in June. So, or in May, excuse me. So that just leads me to believe that there's a chance we see in the June CPI lower gas numbers, thus a lower CPI, thus the translation, the takeaway, if you will, for investors will be okay. Now CPI is not as high as the expectations were. Maybe the Fed can be a little bit closer to those rate cuts, but again, I don't foresee any sort of tone shift or anything like that from the Fed unless we get month over month over month, 3-4 months of lower CPI month over month. So we shall see. I'm actually excited for the CPI data. Especially if we keep trading lower on the Qs and the SPYs the next couple days. I think that will allow me tomorrow afternoon to get into some very, very cheap potential YOLO calls that expire on Wednesday. And that will just be kind of my like lotto ticket for CPI, because I do think at this point, playing for like a little bear market rally, there's more alpha in that than playing for, more downturn. It's just like, we're already down 20%. Like, I don't want to be short this market until we're getting ready for those earnings reports that I was talking about earlier, for that Tesla earnings report, for those Apple earnings reports, for that Microsoft earnings report. Because I don't expect those reports to be good. Wow, I didn't even see Tesla down 6% today. Wow, just getting absolutely shellacked. God, that pisses me off because Tesla went on a huge run last week and I was trading Tesla puts for last Friday and just got burned on all of them. And now Tesla's down 6%. So I should have just timed that a little bit better. But I do think once we get those earnings reports, that's when we'll see the next leg down in the market. But I wouldn't be surprised to see us kind of just chop until then, or even go up another 5-10%, because let me pull up my Benzinga Pro back up and just look at a chart here of the SPY or the Qs, because I do think looking at the chart, it wouldn't shock me to see us either, like I said, either chop or even move up a couple points, legs higher before we start getting some of those earnings reports. So this is the SPY on the daily candle. So back in mid-June, June 16th, is when we hit our lows, right there at the 366 level. We're now at 384. So if we take a look at the chart here, and I'm just going to do some kind of rough drawing with my mouse, and so you guys got to pretend where these lines are. But say we chop here, like I'm saying, maybe we move up a little bit higher, and then here later in July is when we get those earnings reports. I wouldn't surprise me at all to see us break down from there and then come back and test these levels. Maybe not get all the way back down to those 366 levels, but maybe retest these 375 levels. So about 10 points lower from where we are at right now. And then maybe that's where sentiment kind of bottoms out. Because think about it. At that point, we will have all these news stories, right? You'll still have inflation in the mix. You'll have these earnings contractions, earnings coming down, and then maybe that's where we get to that point where finally the market bottoms out, sentiment bottoms out. Because I don't know about you guys, but it seems like there's a consensus, at least among on like my Twitter from different traders and investors, that a lot of people are out there saying the bottom's not in, that this isn't the bottom. Let me bring on my man, see his thoughts on this, because Zunaid might be a little bit more capable of reading these charts. Oh, whoa, you're just gonna pop in before I even give you your full introduction. Hold on, I gotta find my headset.
Wait, do I have an intro?
Now I should be able to hear you. How you doing, Zunaid?
I have an intro?
Well, I was gonna give it here.
Yep, that's right. I am in Detroit. Happy to be here.
Yeah, live from Detroit, Zunaid. Zunaid. All right, so let me just put it this way. So I know you're a big, I know you're a big type of gambler, all types of gambling, but I know you're a big Powerball scratch-off lotto ticket player. Say you just hit the lotto, right?
Okay.
It's an $100 million, thing. You got taxes, obviously. So let's say you take away, I don't know, $40 million from it. You pay 60% in taxes. You got to pay the cut to Uncle Sam. First question. Are you taking the lump sum payment, or are you taking the option where you get, checks over time?
So can we do easy math? Let's say I won 100 million.
Okay.
Let's say 50 million goes to Uncle Sam. Okay.
Okay, 50,
So I
50
get 50
million
million.
taxes.
Yeah, so I
Yeah.
get 50 million myself. Now, if I do lump sum, I get 50 million. But if I do yearly, what am I getting?
The tax implications are a little bit different. I think you pay more taxes on the lump sum, so you'd get 50 million lump sum or 60 million over 10 years. So 6 million a year for 10 years.
Okay, so I get an additional 10 million over 10
Yeah.
years, about a mil a year. Yeah, no, I would go ahead and take the 50 million. Easy.
Okay, because
Lump
you think
sum.
you can make more than that 10 million on investments over that
It's
10
the
years?
same exact reason that instead of me paying quarterly taxes on my business through day trading, I pay them once a year. So I get a penalty that I have to pay the IRS. But I'm arrogant enough to believe that, hey, I will make more money trading with this money and the cash flow than the penalty I'll pay for the IRS.
Got it. Okay, so I like that. I'm with you, or I would take the lump sum. All right. So for the sake of this hypothetical, let's put trading aside and say, I know you're a very good trader, so your trading account is fine. It's already got thousands and thousands of dollars. Your trading account is fine. You just want to use this money that you won from the lottery for your long-term investing. So now you've paid your taxes. The lump sum has hit your bank account. You have $50 million. You put it in a brokerage. What are you doing with the cash? Are you letting it sit there? Are you putting it all to work right now? What are you doing?
I would go ahead and set aside, I would look at how much I would need for retirement, right? And then I would go ahead and set that aside in like cash, maybe some bonds, maybe hire some old boring person to tell
Gross.
me tell me I know, but that's just a little bit, just a little bit. And then the rest I would actually go ahead and buy some uh complexes near college spots. So like a little bit of housing situation near college areas, the popular colleges around the world or around the nation, if you will. And I would invest in real estate. I'm not the biggest fan of real estate because I like to click buttons. But you gotta, when you have that kind of money, you gotta diversify a little bit.
I know 100%. So I agree. I
Like I'll
like
buy
the
a spot, and I know you're living at a fancy place already, but just in case, I'd buy a spot near Detroit. And you can just pay me rent.
okay. Um, I would do that in a heartbeat. I think you'd be a good landlord. But basically, my point for this hypothetical was asking, for in terms of the SPY, do you think, now would be a time you'd be willing to invest in, at least for the long term, or would you want to wait to see if we come back down and test those bottoms? Do you think we're coming back down and retesting those bottoms?
I think you have to go ahead and prep yourself to, hey, this is an area where I'm going to start investing, right? So like my friends ask me all the time, hey, what should I do? This, that, the other. And I tell them the same exact thing. Look, you've got here. Matter of fact, I'll go ahead and do that. You've got the Qs. Let's just take a look at the Qs. The Qs are down at the moment around 30% from the highs. All right. You got, let's just say the SPY. You've got the SPY that's down about 20%, right? So for me, it's like, hey, if you have $1,000 that you can invest this year in the next 6 months, I would go ahead and put in 500 right now. Thank you for coming in front of the camera. I appreciate that. And they at least recognize it and cock back. And then I would go ahead and put in another 250 at the end of Q3. And then I would go ahead and put in another 250 at the end of Q4, aka the end of the year. That's how I would play it.
Okay. Yeah, I don't mind that at all. And honestly, it's fun to play these hypotheticals because once you're talking with that about that much money, like my strategy would be a lot different with that type of money than with what I'm working with now. Because like you said, when you have that type of money, you can start looking at some of those investment opportunities like student housing by college campuses
Yeah.
or things you might be priced out now. But also, you have to just consider like how much money you can make off just dividends from holding like the SPY or the VU. If I bought $20 million of VU right now, like my monthly or quarterly dividend payment would be so much that it would like be stupid almost not to take some of that money, not to expose myself to investments that pay that sort of dividend.
Yeah, exactly. So that's the way I'd look at it. And again, I've been so used to click and invest, click and lose money type of thing. I'd have to kind of look into doing other things and venturing out, different things like that. Because you know what they say, making your first million is the toughest. Making your second one is much, much easier. And then obviously as you grow, it gets easier and easier, if you will. I'm not a millionaire. I can go ahead and say that publicly. When growing up, I had a cocky, arrogant tattoo I wanted to get when I cracked my first million. I might still do it. You know what it was?
What was that?
Just to get 2 commas tattooed.
2 commas? Yeah, that reminds me of
Commas.
the, have you ever watched, Silicon Valley?
Yeah.
Great show. I'm actually rewatching it right now, and it's, pretty funny, and it holds up well. I saw this on Twitter, so it's not an original thought, but someone said, like, "I wish they would come out with a new season of Silicon Valley and just make it all about crypto." I think that'd be really funny because I
Oh my
think that's one
god, yeah. That'd be
I th
a popular show.
yeah, I think that's one of the best things that, or one of the best one of the things that the show does the best is they're like very good at kind of spoofing like the Silicon Valley characters. Like Peter Gregory in the show is like Peter Thiel or whatever. And it's like if they were able to get like a Sam Bankman-Fried type character, like all these crypto guys, like I think it would do really well.
I mean, imagine them having a Satoshi, right? And kind of playing that role and however they want to do it, whenever they want to do it. That would be kind of interesting as well. And it'd be very relatable to the Gen Z folks as well.
Yeah, and yeah, it's tough because I think it is like really hard for in like Hollywood and for a lot of these like producers for shows and stuff. Once the show, like it's probably like impossible to get all like the writers and directors and actors back because everyone starts working on different projects. Such as like the
Right.
schedule doesn't work anymore. But
Right.
I think it'd be cool like to see them try to do it, even with if
Yeah.
it's just like a few of the actors and maybe a few of the directors and writers.
By the way, for folks that from live trading, or if you watch us for live trading in the mornings, I am short the Qs. I have been short since I think 11:10. No, I think before that. How long have I been short? Oh yeah, I've been short since 11:10. On the Qs, I have the
So it was at about
289
290
pip.
at 11:10.
Yeah, we were at 11:10. I just have to look at my confirmations. 290 50s. I am short the Qs, and I'm waiting to see if we can. This test, I'm hoping will fail, obviously. But I'm currently down about. I mean, I've been scaling in and out, but now the contracts that I hold, I'm down about 15, now 12% on the Qs. But I am short. I'm looking to take some more profit if we can get around the 180 to around the 288.75 area. I'm long the Qs. Well, here's the thing. I mean, I'm curious. Again, we have different things, we nailed the SPY, Aaron.
Really, this morning?
Dude, we nailed the SPY bottom. So we caught this double bottom here. Let me go back to my where is my show? There you go.
Ooh, Dustin, do you know what season or episodes they talk a little bit of crypto? Because like I said, I'm rewatching the show right now, but
Yeah.
what I especially when I'm rewatching a show that I've already watched before, I'm typically like not intensely watching each episode. I'm like on my phone, and it's like good to just have on because it's comfortable and I've seen it before. I don't need to pay attention to it. But I do want to pay attention whenever they talk about crypto because I think it'll be funny to like
Do
hear
you
what they're
know
saying about.
which show I'm watching again? Suits.
Oh, yeah.
Watching Suits, but now it's getting to the seasons where like it starts to suck.
I
But I'm
know,
rewatching Suits, but I'm glad you brought up Silicon Valley. That's a good one for me to go back to.
I never Suits was one of those shows where I watched like the first few seasons, loved it, and then just never finished.
What about This Is Us?
This Is Us?
Yeah.
Is that a joke?
As in, would you rewatch it, or as in, have you seen it?
I've never seen it. Like to me, like that's just one of those shows I always see like commercials for on like NBC when I'm watching like Sunday Night Football. I've never thought about watching that show once in my life.
I think you should. Here's what we should do, Chad. We should have an assignment. I need you to put this on your schedule. All right. But don't be signed into Time Doctor when you do it. I need you to watch at least 2 episodes of This Is Us. At least 2. And let me know what you think. Now, it's not a show that like you can just be on your phone and mess around.
Isn't it like a really serious, like sad, like sappy family show? It's like the most classic like ABC family like Sunday night 8 p.m. show of all time.
Watch it.
All right. I mean, you're the first person I've ever had in my life recommend it. All right, season 5, episode 7. I've trust me, I've seen it like on commercials and stuff. Like I said, I don't think I've ever met anyone that's watched it. I don't think I've ever.
Oh my god, dude! Look. Here's what I do. My friend and I, we would at the time we would order pizza, we'd order actually Thai food, and we would watch the show, and then we would have a box of Kleenex just in case. And we'd use it.
Really?
Oh my God, yes. Oh, I'd weep like a little, oh yeah, 100%.
I miss the last show that I had that I feel like I would like watch with friends, like as it came out every Sunday night, was Game of Thrones. And I kind of miss that. Like, I feel like there's not any shows like that right now where like, oh, like we got to watch the new one every night and then like talk about it with your buddies.
Yeah, I never got into that, but
Into Game of Thrones?
I never got into Game of Thrones. Haven't seen a full episode once. Actually, maybe one time I did because I went over to a buddy's place to play FIFA, and then Game of Thrones was coming up or whatever, so we watched that. But anyway, let's see how the Q short goes. Still short the Qs. Hopefully, it works out for me. We shall see. But yeah, what do you got any trades on for the week that I should lose money on by fading you, or make money by fading you?
Fading as in following, or going through in the opposite?
Fading as in going through the opposite.
My plan now, and I'm gonna pull a Jerome Powell and say I'm holding the rights to tentatively change my plans as the data changes. You know, if there are any material changes. But if say we maintain, you know, this price action on the Q, say we finish down 2% today, and if we're pretty flat tomorrow or down, I will look at some YOLO calls for that expire Wednesday. And again, this is specifically playing for a potential like bull rally after the CPI data if it comes in lower than expected.
Are you going to put on a trade before then, or are you going to wait till the number comes out?
No, yeah, I'm going to put it on Tuesday. I'm going to put it on like tomorrow afternoon. So I'm long the calls overnight, and then the data will come out 8:30 in the morning. And then hopefully we open up 2.5% and I sell the calls for 1,000% gain.
Yeah, no, easy peasy. I mean, duh, why not?
In an ideal world, that's how it works out. I'm not saying that's how it's going to work out. We will see. But that is right now my trading plan for the week.
Is there a world where you'll buy a put and a call and get a spread and try to, what's that, a strangle?
So okay, in that world, I would do it, but I would do it to where I'm still have more exposure to the long side. So to where maybe I have 10 calls and then 3 puts, to where I'm still weighted to
10 calls. God damn, boy. Okay, I see you.
Well, I mean, like I can buy some cheap ones. Like I could. I mean, we could look at them right now if you want, but I'm gonna wait till tomorrow till we get that. So I can buy them the day before. All right, so I'd be looking at the ones that expire July 13th. That is Wednesday. Yep. Yeah, I think I'd buy. Okay, so I'd be looking at like the 295 ones right now. They're $1.32, but I'm expecting tomorrow after. Well, and I might change it to like the 293s if we're down again tomorrow. But we'll do that tomorrow. Zunaid, remind me on or I don't know if you'll be here on Benzinga Live. Maybe. I hope you will be. But I will look tomorrow afternoon at those calls that expire on Wednesday and see which ones I'm feeling.
All right, we'll see. We'll see what happens. Tomorrow I'll be at State Farm Arena calling the Hawks esports team. So that's tomorrow night. But I got to go get a haircut. I got to look pretty. You know what I mean? I got to get my beard done, nails done, hair done, everything did. You know what I mean?
Wait, who did I just see? Oh, it's wait, you said State Farm Arena? Is that in Atlanta?
In Atlanta, yeah. It's where the Hawks play.
Oh, okay, cool. I just saw I think it was Heinz Field in Pittsburgh is no longer going to be Heinz Field.
What are you naming it to?
I have no clue. But that reminded me, I want to do a content series. Like I want to do like an article, but I think it could be a video too, where we look at what the return of a portfolio would be if you held only companies that sponsor the naming rights of like big 4 stadiums in the United States.
Well, they'd have to be publicly traded, which filters it down.
Right. So there's probably 20 publicly traded, like in St. Louis, like Busch Stadium is, Anheuser-Busch. Like if you held Busch, Anheuser-Busch or like InBev stock. If you held Isn't it American Airlines Arena or no, that's what it was in Miami before Crypto.com bought it.
Yeah.
Let's think of some other ones.
Crypto.com is not publicly traded, right?
Yeah, no, so just exclude any ones that are privately and, like, I think what you would find, like, I almost think, like, maybe the returns wouldn't be as good for, like, S&P, and the takeaway might be, oh, the companies that are spending this money in advertising aren't really doing that well, or maybe it's the opposite, that, like, the returns would be really great. I think it'd be interesting to see either way.
Yeah. I don't know. I'd be interested to see that. Now you've got Mercedes-Benz for the Saints. They renamed to
Caesars, and that is,
That's right. That is publicly traded.
Caesars, yeah. Wellness Matters is asking. So, I'm talking about calls on the queues here, just
On the
making sure you're
queue.
not talking
Yeah,
about the spies or anything. But on the queues, yeah, if I were looking today, I would be looking at, like, the 295s. That's about a break even of around 2.3%. I feel like that's a
No.
huh.
Sorry, I'm gonna let the queues go up. Sorry.
Oh, and I feel like that 2.3% is a good number for me because it's far enough outside the strike that it provides some good alpha, some good risk return. If you buy some out of the money calls, then we do happen to get up there because basically this options market is pricing in that this won't happen, that the Qs won't go up 2.3% before this Wednesday. And I mean, if we get a really low CPI data and we rally off that, that's around where I would expect that rally to be, right? 2.5 to 3% would kind of be like a bigger rally. I'd be surprised if it was only, 1.5%, because in these bear markets with the added volatility is where you can really get those pops, especially on good news. Because what does that do? Is it creates everyone who is out there like Zunaid short the Qs to say, wait, shit, CPI came in good, and now they're going up. Now we got to cover, and then it just creates this effect of, okay, now this pop that would have been 1.5% is now 2.5% or 3%. So you can see some of those really vicious rallies in bear markets.
I am upset that the queues are now going up. I
Yeah,
just bought one more. I just bought a few more contracts for
Ford
60
Fields
cents
here in Detroit. I'm gonna do it. So I'll go through all the. I mean, it sounds like a lot of work, but there's only there's 4 big sports leagues, about 30 teams each league. So there's only 120 stadiums. Probably only half of those are public. And yeah, I would just be curious what the returns of that portfolio would be.
How long do you think it would take you to put that together?
It would depend on if there's like a website or a tool that makes it easy to put 60 tickers in and see what like the return of the portfolio would be over 10 years. Otherwise, I'll have to manually put them all in a spreadsheet and you would have to just assume we had equal weighting. If we owned $10,000 of each of these stocks, what would the returns be over the last 10 years, and see if it's
help them out, chat. Is there a website where you can type in the ticker, type in the date, to and from, and it tells you the info?
Yeah,
there has to be. There has to be.
By
By the way, if you're trying to go long, obviously the Qs are trying to cross VWAP right now. Apple's a decent long here. I mean, the 145 is held VWAP right there as well. It could possibly test the 146s. Obviously, that's what's kind of helping the market is it's not breaking below VWAP. But come on, Qs. Come on, Qs. I did go ahead and add some more, as I said.
Oh, you added some more puts?
Yeah.
Doubling down on the losers, huh?
Whoa, sir. We've been scared. So here's what I've been doing. Here's what I do. I have a core position, right? Let's just say I traded with 1,000 start off. I have $1,000 worth of contracts. Then if I am up like 10, 15%, I'll go ahead and sell $500 worth. Then when it comes back down to the price I bought it at, I'll go ahead and buy another 500 and then kind of just scale in and out, scale in and out, scale in and out. So that's what I've been doing. Like I've been in at 60 cents, sold at 89 cents, in at 63 cents, sold at 85 cents, just kind of back and forth. And I just got filled at 60 cents a few moments ago, and I'm going to sell those at like 72 cents. Let's see if I can do that. So screw you. I have a plan. I'm not a madman.
What is this I'm seeing on Twitter of a China bank run? Is that true?
Apparently, allegedly, there have been accounts that are getting frozen.
In China?
Yeah, I think Shanghai is what I read. I don't know.
I don't know, man. What?
Did you itch your nose with the mic?
Maybe.
Did anyone else just see that? This man just said,
Yeah, I bet Spencer would have known of that website. Thanks, Tiny Pie, for making me sad on this beautiful Monday. But yeah, I mean, it's so like hard trying to keep up with the news from China because like I feel like anything bearish out of China gets like exacerbated by the US media saying like, "Oh yeah, see how like bad China," like and it's like I don't know. To me, it's one of those things where, like, yeah, like there are fucked up things that go on in China, but like I care more about the fucked up things that go on here in the United States because that's where I live and that's where I
Right.
feel like responsible for. So I feel like every little bad thing that comes out of China gets like blown out of proportion, and then like the good news gets kind of bare. Like when things were really bad in Shanghai, it was all over the news every day, and then as like the lockdown and things started getting better in Shanghai, like we didn't hear about it as much. So
Can you imagine a bank run in the United States?
yeah, that'd be crazy. Yeah, Shannon, I don't know what it is. I think that's just like my nervous tick when I'm on screen is to just touch my
Did I
face and
make you
touch my
nervous?
nose.
I'm sorry.
No, you don't make me nervous. Just all these beautiful people in the audience do.
Oh, but not me. Okay, got it.
Except for
Got it.
Shannon's very nice. I had the pleasure of meeting Shannon in Las Vegas. Very
Oh,
nice.
really? Oh, very cool. How was that,
Very-
by the way? Wait, when's our next conference? I think it's in Chicago, September.
Yeah, correct. Our next conference is the Cannabis Capital Conference, our fall edition in Chicago. So if you're in the Chicago area, even if you're not into cannabis, come check it out because it's just going to be a good time. Like all our events are always a good time. You got some great speakers, and as well as different events.
I don't think
China.
I've met anyone like in
You've never
person.
met anyone from Benzinga?
I don't. Well, so there was one person who watched us on Benzinga Trading live in the morning, and then they saw me on the 2K Esports broadcast, and they're like, "Wait, you're the same person?" And I was like, "That is right. I am the same person." But I don't think I've met anyone in person. There's one person who I think was gaslighting me. Okay, I don't know what the term gaslighting means, but whatever. Here's what happened, Aaron. I'm at Old Navy because I'm a badass. I'm a baller. I shop there. I'm trying to shop for some shirts or whatever the hell it was. And he's like, "Oh, like I was talking to someone else and I was like, hey, I need to buy shirts, but I can't have them be like checkered or whatever." And she's like, "Oh, why?" And I was like, "Oh, like, because when I'm on camera, like it just doesn't look good or whatever." No offense to you, AB. So then someone else comes up to me 2 minutes later and they're like, "Oh, hey man," like starts talking to me, ask me what I do and different things like that. And they're like, "Oh, like I swear I like recognize your voice. What are you on?" Blah, blah, blah. And so he's making it seem like he knows me from somewhere online, trying to make me feel famous. But like I think he was just lying. I think he was just straight up lying and just gaslighting me. I don't know if there were cameras around. I don't know if he was making fun of me.
You were
I
on
have
a
no
show.
idea.
You were on like pranked.
Yeah. But I don't know. What are you staring at?
What am I staring at?
Yeah, what are you staring at?
I was just reading about this China thing. See, because that's what I'm saying is it's like it's so impossible to tell like is this a big deal or not? And like people on Twitter, like Zero Hedge and stuff, want to make it seem like a big deal. But honestly, from what I can tell from what I'm reading right now, is it sounds like maybe it's just this one bank like bad did poorly and now its customers are mad. Like I just don't know, is this one bank failing indicative of like the whole Chinese banking system, or is there just one bank in a huge fucking country that went bankrupt? You know what I'm saying? Like there's like a big
Yeah.
difference between the two things.
Well, let's hope that they have something called the FDIC.
I
Oh,
don't think
wait.
they have the FDIC.
So here's the thing, by the way. I'm generally so look, I don't have millions of dollars, but I am curious where rich people put their money, or if they have like a different bank that is insured a lot more. Because it's like, hey, if you have $1 million you want to put in the bank, but each account can only be insured up to $250,000 by the FDIC, do you then just open up 4 different accounts and spread it, or like, you know what I mean? Like anyone in the chat, if you have millions of dollars, or if you're more knowledgeable than I am, help me out here. Let me know.
Yeah, and also let us know in the chat just what stocks, what trades you guys are watching today.
I'm about to lose money on this goddamn Qs. I'm waiting for this 10-minute candle, which has 2 minutes left, to see if it closes above this EMA that I have. That's kind of what's been guiding me. You can see the wicks here that kind of didn't hold. So that's That's why I'm still in the trade. But as soon as that 10-minute candle closes above that EMA, I'll take my goddamn L. Whoa, 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 whoa! Relax. Why are we going up though? Chill, chill. Trying to see if there's any other trades for us to take a look. I mean, the Apple one's been kind of working out. If you were long Apple, someone in the chat, you guys were long Qs and I was short. So congrats on you making money. Make sure you scale out. All right, I'm gonna take my L here. How much am I losing here? 33%. Holy shit. What do you think, AB? Should I close or should I wait a minute to see what this candle does?
I think you should wait a minute to see what the candle does. It wouldn't surprise me.
All right, chat. We're gonna wait. I was down 33% AB, so we'll see how much I'm down in a minute. We'll see how much you cost me.
Okay.
AB, did
oh,
you
here we
watch
go.
Charles yesterday?
Here we go.
What?
AB, did you watch Charles yesterday? No, I did not.
What is Charles? Is that a TV show?
No, he's a Formula 1 racer, Charles Leclerc. Oh, he won? Hell yeah. Hell yeah, Charles.
I went go-karting in Indianapolis, but
oh, really? We're actually talking about going go-karting here, Rohan, Aaron Thomas, and I. So
I may or may not have broken the go-kart.
Oh, really?
True story. Yeah,
I've done that.
They were pissed at me.
I've done that a few times.
It's on my Twitter if anyone wants to go watch it. But dude, they were pissed at me. Thankfully, like I was with an organization that's well known, so they didn't like kick me out. But they were not happy.
The queues have come down a little bit. Maybe you should.
They have, my friend. They have. Well, here's the thing. Do I just hold and hope for this to go back down?
No, I've already made you money by telling you to hold. So sell now.
You have. Congratulations. I was going to sell at a 33% loss. Now they're at a 22% loss. So you did help me out by 11%. But here's the thing. I'm a greedy son of a. So for me, it's like, what if it continues to go down?
What if? Well, how many do you have?
How many contracts do I have? Hang on, let me check. I've been scaling in and out. So now I have about 20. I have 20 contracts. So I am down. Let me see what my average price is. 0.79. Yeah, that's not a pretty number. Not a pretty number. I'm currently down about $500 on that position. Oh, now I'm down about 400. Anyway, here's a game plan. Here's a game plan, chat. You ready? You ready? What I'm going to do is if this candle goes above this candle, which is 290.26, I will go ahead and close the position at a loss. What's the most expensive car you've driven? Not owned, but driven.
Me?
Yeah, you.
That's a good question. I know I've driven a Tesla at one point.
Didn't Luke do a review on some fancy car like a year ago?
Yeah, we had a McLaren.
Wow.
For a while that we were test driving, or a weekend, not a while, but I never got to actually drive that.
They didn't trust you. I get it.
As far as other really expensive cars I've driven, well, okay, so I used to work at a full service car wash in high school where like people would drop their car off, we would put it on the track, put it through like the car wash, pull it out on the other side, dry it, like vacuum the inside, do all this. So all the time people would come in with super nice cars and be like, "Oh, be careful putting that one on the track." And the worst was when it was like it was a nice like Ferrari or something or Porsche that was like a stick shift. They'd watch you, and if you like stalled it out, they'd be like, "What the fuck? Like, you're messing up my transmission." So probably at one point when I was working at the car wash, I probably drove a nice Porsche or Ferrari or something.
So you know how to do manual driving?
I do. I've never like driven a manual as my own car. I know how to drive a stick though. My mom's car, not right now, but the car she had before the car she has right now is a little Honda hatchback that was a manual that I would just drive around because I thought it was fun to drive the stick, but I've never had my own stick shift car.
I don't know how to drive a stick. I don't know how to drive one. I actually got into a car wreck maybe about 2 weeks ago. No, 3 weeks ago. It was a
really?
little minor one. Wasn't my fault. It was the other party's fault. And the insurance company is like, "Oh, we have to investigate." I'm like, the cop gave her a citation. What more do you need to investigate? They're like, "Oh, we got to do whatever." I'm like, "All right, cool, whatever, Wendy." And they have an adjuster that comes out, and the adjuster's like, "All right, cool. We will give you $2,500 right now." And I was like, okay, like when do I need to let you know, yay or nay? He's like, right now. I'm like, on this phone call that you just informed me of this offer 10 seconds ago, you want to make a decision? Like, I'm not doing that. And then he calls me back. He's like, hey man, since you didn't take the offer is now 1,800 and it'll go to the shop that you go to repair it and not you directly. And I'm like, what kind of dumb, like, I don't have an ego, but I do have my pride in that you will not strong arm me. You're out of your mind. So now I'm dealing with that. So that's a lot of fun.
Yeah, well, I'm sorry to hear that you got in an accident. Those are always a pain to deal with, but it looks like the queues keep moving down, so that's good for
They
you.
are. Yes, it is. Now I'm only down 10%. Woohoo! Yeah. The question though is it going to come down lower or not? Or do I just cut my losses? You know? Oh, now I'm down 6%. Oh, hell yes. I'm not going to lie. I'm going to be a greedy SOB. I don't care. Driving a stick in Atlanta sucks. Yeah. I mean, again, I don't drive stick because I don't know how to drive stick. I got Uber in Indianapolis and she was driving stick. She was not good at it.
Really?
Yeah. I was just not jerking around all day.
I feel like honestly at this point, like there's no point. Like you're fine just driving a automatic. But I do want to, like, maybe the next car I get, I want to get a stick shift just because I feel like it's gonna be like harder and harder as time goes on to even like find manual cars, you know?
So then why do you want it?
Because then I'm saying if I don't get one now, then I might be like 40 and be like, I don't have an option to. Like they don't exist anymore.
Oh, you're saying it's like a bucket list item for you?
Yeah, like at least I can say like, oh yeah, I can tell my kids like, oh, I had a manual car before you couldn't get them anymore before they went extinct.
Speaking of cars, I went to a wedding in Houston 2 weeks ago or last week, one of the weeks. And we left the party at like at 1 a.m. I'm driving back with my rental, right? Automatic.
But you're driving after a party at 1 a.m.?
Yeah. I mean, I don't drink, so, you know.
Oh, you don't? Okay.
Yeah. And my cousin is driving back. She's got her Tesla. She had to stop at a charging station for 30 minutes because her Tesla ran out of charge. And I was like, holy shit, I'm so glad I just have like a gasoline based car because I ain't trying to wait 30 minutes to just sit there and charge my Tesla.
Yeah. I wonder,
Like,
is that how long like the superchargers take? Or like,
I have no idea. And keep in mind, we also had to drive an hour, 10 minutes out of Houston to attend this wedding. It was a beautiful venue. It was a beautiful site. We had a lot of fun. But yeah, just wild to me. Like there's no way in hell I'm waiting 30 minutes to, like, I don't even take 30 minutes to shower and get dressed. I take 27.
Interesting. Yeah, I actually just saw a.
Oh, speaking of which, that insurance company is now calling me. Look at that, right on cue. Give me a sec. I'll update you guys.
Oh yeah, go ahead. All right, y'all. Let me go ahead and take my screen back. I did just see. I was just trying to find it on Twitter. I did see a thing on Twitter the other day that was showing the different car companies like Volkswagen, Toyota, had like the most debt out of any companies. Now I'm trying to find this tweet. See, this is how I do this. I just literally searched on here most debt on Twitter, but it's not popping up. Maybe I got to do like companies with most debt, car companies debt. I don't know. If anyone knows what I'm talking about, let me know. But it looked like Toyota. Let's try TM debt. It looked like Toyota and Volkswagen. Okay, so here's one. But it looked like out of like all the public companies. Oh, here we go. This is the tweet I was talking about. Companies with the highest net debt in 2021, 2022. Toyota Motor Corp, which apparently is such a big company that they have their own internal bank, Volkswagen, AT&T, and Verizon, which is surprising to me seeing AT&T and Verizon. But what's interesting is if you're looking at companies for potential investments and you're looking at their debt or their asset to debt ratios, you really have to take into account what type of industry they're in. So with companies like car companies, like we've seen it before. If a car company is at risk of defaulting and going under or whatever, like they will get help from the government because we need cars and we need people producing those cars. And same thing with telecommunication. I mean, if you think that AT&T or Verizon are ever going to be in trouble because they're defaulting, I truly think those companies, especially given that industry they're in, are too big to fail, right? That they've had to pay so much money. They've had to take on so much debt to provide the service they're providing, to provide high-speed internet and cellular data around the country. So I don't know if it's as problematic to me to see a company like AT&T, to see a company like Verizon borrowing this much money, just given the industry, and that it's not really a um, you could even argue that it's not even just like a purely capitalistic company providing service or good that has a lot. I mean, this is basically a need at this point, is what AT&T and Verizon is providing in terms of that cellular data. So at that point, if you're talking about a company that's like getting paid to provide a public service, like a public good, I don't know. I mean, I'm not interested in AT&T or Verizon stock right now, because like both those stocks historically just have not been good, and I think this is part of the reason why, is because the companies are essentially forced to take on this much debt to provide that service, and they're really okay with doing so, right? If they're saying, okay, here's what we need to do, and we need to take on more debt, we know essentially we'll have subsidies and government backing if we run into trouble, but basically my point in talking about these debt for these companies is, I think given the industry for telecom and even for the automakers, it's not as big of as a problem if, say, like, if I saw Coinbase was borrowing $185 billion, that'd be more of a red flag for me. So it's basically just not a huge turnoff as an investor, but I'm also not super excited by any of these names as investments. I do like Volkswagen long term. I have been kind of building a position in Volkswagen just because it seems like out of all the legacy automakers, Volkswagen is the one that is investing the most into the EV space and really trying to position themselves to take on Tesla, to take on Boyd, to take on some of these other big names. And they're also, if you look into Electrify America, as one of the companies that's doing the most work in terms of building charging stations throughout the United States. So if you do think the future is having kind of charging stations like we have gas stations, then Electrify America is a great way to get exposure to that, which is a company that Volkswagen owns and operates.
I see you've got a guest in the chat, or guest on the StreamYard, so I assume you have something coming up, but I'm going to go. The insurance agent just told me that my claim was denied. So this will be a lot of fun, and the saga continues. Aaron, I will keep you posted on how this goes. I'm gonna go find me a lawyer.
Yeah, well, I was just gonna say, if you want to if you want me to call in and pretend to be your lawyer, I've watched a lot of I've watched a lot of Suits, so I think I know the right like legal terms, things to say. I could say the preponderance of evidence, things like that, and maybe they'll rethink denying the claim. That's messed up, man. They don't know who they're messing with.
They don't know how much I have in terms of lawyer power. But anyway, you have fun with Jason. I'm gonna dip out of here. See you later, pal.
All right, Junaid. Thanks for coming on. I really appreciate it. All right, y'all. That was my man, Zunaid. You can catch him every day at 9 a.m. Eastern on live trading. Typically on Mondays, we have Jake Wujastic from TrendSpider. Jake could not make it today. I think he's traveling with his family with Cuba. So we are going to have Jason Krutsky from TrendSpider on instead of Jake. So it's going to be great to get a fresh face on the show. We're going to be doing something similar where we're just running through some charts, seeing what looks interesting from a technical analysis standpoint. With that said, let me go ahead and pull my Benzinga Pro back up. Whoa, almost messed up there. Almost pulled out of the browser where we're streaming from. That would have been bad. And then whenever Jason's ready, when I see him give me a thumbs up or something, we'll go ahead and give him our special intro and get him on the show. All right. Let's do a quick check-in on the Qs. Still hanging out down nearly 2%. Nothing really. Oh, cool. Just got the message that Jason's ready to go. Let's go ahead and give him our special intro and bring Jason on. Mr. Krutsky, how you doing today?
What's happening, Aaron? I'm doing pretty well. What about yourself?
Good to have you on the show. I think we may have met at some event, maybe like the one in Orlando or Vegas, if you came with Jake or Dan.
Yes, I was there this Vegas. That was the first FinTwit conference that I've been to. So
Okay, so I think we might have briefly met there, but
yeah,
I'm Aaron.
Aaron,
By the
yeah, good
way.
to meet you, man. Happy to be here. Thank you for
Good to
having
meet
me.
you. Thanks for hopping on. So you do have the ability, you should have a little share button on the bottom of your screen if you want to go ahead and get some charts pulled up. Otherwise, I'm happy to pull up charts on my end. I just know they won't be as pretty as the Trend Spider ones.
Yeah, I'm happy to share my screen with you. Let me know if I need to adjust like the sizing of it or anything.
No, looks like we're good. I'll be able to
Good to
go
go.
full screen if we need to, just to get a little bit of a closer look, since it's, I know sometimes we have people watching on their phones or tablets or whatnot, so try to make it easy for them too.
Right on. Tight. Yeah. What are you guys looking at today? I was kind of watching the past maybe 15 minutes or so of your stream.
Yeah, we've been really bouncing around. So we've been looking. I mean, we have our audience is mostly, retail. I'm sure a lot of the same audience as yours. So retail investors, so people are always interested in your Teslas, your Apples. But I've really been watching the indices today. So your SPYs, your Qs. And that's where the charts I've been watching the most recently, just the SPYs and the Qs, because we're just in these times right now where I feel like that's where it's almost feels like, to me, it'll behoove you more to chart the indices than individual names, because like, I don't know if you have a different opinion, but right now I feel like Teslas, your Apples are all kind of trading together, so might as well just see what the Qs are doing.
Yeah, I mean, I've kind of been focusing on this indices for maybe the past like 6 months or so. Mostly just trading SPY Qs, ES, and Q. I mean, I know what's going on a lot of individual names, but I'm kind of with you. I kind of feel like trading indices is just a little bit easier. The liquidity's there. It's just the spreads on options are obviously quite smaller than a lot of the individual names. I just kind of find it to be more, more my thing as I've kind of developed more.
I wonder too, and this is the first time I'm kind of thinking about this, but I wonder too if it's something to do with like in, especially when we were in like the crazy bull markets after COVID and stuff, right? Like everyone wanted to look at Tesla's chart or Penn's chart or DraftKings or whatever it was, like whatever individual stock. And now that we're in a bear market, everyone wants to know like where's the bottom on the Qs? Where's the bottom on the SPY? Like maybe in bear markets, people are more interested in what the indices are doing, whereas in a bull market, when everything's up, people want to know like, oh, is Fubo going to go up another 10%? Is Penn going to go up another 5%?
Yeah, I think kind of the trick is using one to help you gauge the other. I've started doing like every other day I live stream. And we were watching on Friday, we were watching Microsoft. And the reason why we were watching Microsoft on stream was because it was lagging to the rest of them. The Qs had already kind of gained this whole gap on Friday. We can go back and look at it actually. I'm going to show you what I'm talking about. Like the Qs gained this gap relatively early in the day, and Microsoft was lagging way behind. And we were kind of all asking the question, like, why is it lagging way behind? It should probably be following. Apple had already gained the gap, was trading above previous days' highs. Like a bunch of names kind of in the same space. We're all doing the same. We're all well ahead of Microsoft. So we took it as an opportunity to get into a trade in Microsoft. Ended up working out really well. It begs the question, why is Microsoft so weak in comparison to the rest of them? Why did it couldn't even, it barely filled the gap that day. That's all it could do. You go to Apple and you look at Apple and you see how quickly it gained the gap here and then traded well above it as well. So, using one to influence the other, if the Qs are rocking and rolling today and there's some major name in the Qs that's just stagnating, some major tech name, and all the other tech names are working, that might be a good opportunity to get into that name, but you have to be kind of quick with it as well. So
yeah, and that's, I mean, I think it's been the case for the past few months where it's really been a market for traders that are quick in and out. You can be nimble and kind of being able to navigate these markets. Whereas if you're maybe a little bit more hands off and you're usually just playing swing trades and trying to identify, it's like you're not going to find those plays where, oh, I can buy these calls 2 weeks out because the stock's in an uptrend and it's just going to hold that uptrend. It's like, nope, it's going to go down, then back up, then down, then back up. So definitely one of those markets where it's been stronger for people that are quick in and out.
That's what I've found. The longer I've held, the worse I've done. So, yeah, getting in and out is the right way, at least has been for me. There are some names that are working. I mean, China names, you guys were talking about it earlier. China names have been working quite well. Be it
Yeah, I mean,
KWeb or Neo
well,
or
that's
whatever.
almost more indicative of my point. Like Baba's been such in an uptrend. It's
Right.
made a beautiful move from 82 to 124, and now it's down 8%. So you could have bought this. You could have looked at the whole market environment last week and said, okay, Baba's actually showing a lot of strength compared to the overall market, right? If you looked at SPY's chart compared to Baba's been a lot stronger over the past 6 weeks.
It
So you
has.
buy the strength, the trend's your friend, and now you're down 8% today. So it's like you said, you got to be quick. You got to be able to get in and out of some of these. And then, of course, for people trading Baba right now, the question is, all right, is today, a day you want to buy the dip on, buy a stock that's been in an uptrend on a down day, or is this something bigger where maybe this is going to be a short-term top and we're going to move another few percentage points from down here?
Yeah, I would kind of be on the camp of let this kind of settle down. You've got so much time. If this is really the beginning of a bottom for a name like Baba, if it's really basing here and it's really going to extend over a longer term, why bother buying today on a big gap down? Like let it resolve, let it show some relative strength, let it come back a little bit. I would let it pull back some. I mean, kind of this level makes a lot of sense to me. This 103 level. I mean, $100 is generally a pretty decent psych level for lots of people. Wouldn't be a shocker to see this thing pull back, maybe even back to about $100. I would let it do its thing. I never want to be a buyer on a big 8% gap down day. I don't want to be a long buyer on that kind of day. If it were to rally some midday and maybe try and find its way back to the open, I would probably be trying to short it and look for a continuation move a little bit lower. I mean, what are they falling on? Are they falling on this bank run news like you guys were talking about?
Here, let me go to my Benzinga Pro. I'll tell you right now. I mean, I don't know. I mean, like I said earlier, it's like impossible to tell with some of these. Um, let's see.
Neo
Shares of
and
US shares of US listed Chinese companies were trading lower in Hong Kong on Monday with major tech stocks like
yeah,
see.
FXI looks a little bit stronger than KWeb. Looks a little bit stronger than, I mean, it still looks terrible, but at least you're coming into kind of an area. It's kind of hammering out
Okay,
a
so
little bit.
Shanghai health officials said on Sunday the city reported its first case from a new Omicron subvariant, triggering new rounds of mass testing and targeted lockdowns.
Lovely.
So yeah, it sounds like it's just more of the same of like China fear. And that's what was so crazy was like if you go back a month or 6 weeks ago, to when Baba was at like $80, the Shanghai and China was like completely locked down. Like people legitimately could not leave their apartments and stuff. And there was just all this fear surrounding these Chinese names. Then over a few weeks, the lockdowns eased a little bit. People started to come out. Baba came out and said, oh, even though people were locked up, people were still spending money. And the stock made this incredible move. And then now we're locked down again. So I feel like we're just going to keep seeing these cycles come out.
Yeah, and I mean it's a logical place for them to reverse it backwards, right? I mean, we made a new high against these what is this? I guess this is like March. Yeah, mid-March highs. We barely made a new high. So, not to me it kind of makes a lot of sense that they would reverse it kind of into this previous area here. I'm kind of mostly like a price action trader. So this jives with what I was kind of hoping they would do. And now it's just a matter of how far they pull back. And, you do have this unfilled gap down here that could come into play. Even if they came all the way back into this unfilled gap, you still would be making technically a higher low, which, what's the definition of an uptrend? It's higher highs and higher lows. So they could come all the way back into this 86 area over the coming weeks. And that to me would be a really nice opportunity to get long, because then you have a nice area that you could kind of be playing off of, right? Your stops would be just below these previous lows, be nice and clean.
Yeah, and like you said, just like looking at this name, just wanting for it to like settle down a little bit. I find myself feeling that way with stocks that have that are just like very strong in general.
Mhm.
Oh, okay. So you're looking at XPeng here. So like when
Mhm.
do you mind pulling up either like the XLE or Chevron or something like that? Because that was another one of those stocks where it's like clearly the trend is here. You have the trend is your friend. Like it's super strong. But then it got overextended, and if you bought up here at the top at $92 or whatever, you're way underwater. You're down like 25%.
Yeah, you're getting absolutely rocked here. I mean, the proof was in the pudding, right? They start taking out some of these lows, and you should if you're long and they start taking out lows, you should start thinking about, all right, well, they're making kind of fresh lows. How much lower are they going to bring it? And so many people use so many different indicators. There isn't like a right or wrong indicator to use. I personally love the anchored VWAPs because they're so easy to throw up on the chart real quick, and they give us a really good understanding of where your average buyer is from any given time. I know Jake's a pretty big fan of them as well. So as long as price action is above your anchored VWAPs, then your average buyer's in the money. Well, now we start seeing from this move from low to high. I mean, kind of the low that started this ramp up to these highs. Now we have our average buyer underwater. So our average buyer from January of this year, December last year, is actually losing on this trade right now. It's going to be a big level that price might have trouble with. You see, they tried to hold it, they failed below it, they tried to gain it, and now it's failing again. And maybe Friday was the retest for a continuation move lower. Then you look for like levels of interest that price hasn't really come back to yet, and you see this consolidation area in here. It kind of tested right here, but it could easily come back into this level, and I wouldn't blink an eye. Like this to me would be a kind of a good opportunity. There is that unfilled gap down there below too. So yeah, I don't know. Tough to say.
So at what point would you then be like considering getting short or getting long here?
So as far as a short is concerned, I mean, right now, a short kind of in here seems relatively logical to me, with either your stop above previous day high, so maybe Friday's high, or maybe above this anchored VWAP here, kind of in this area is where I would set a stop. That way you have it, it's pretty tight. You're talking about $2 or so from where $2 to $3 from where price action is right now, depending on how you like to set up your trades. I don't know, everybody's different. So many people are playing like zero DTE options right now. $3 move on a zero DTE option and against you is going to go to zero essentially. Or you could draw down pretty heavily, but if you played a month out and you played like a 70 put a month out, that seems like kind of interesting. That seems, you could give it a little bit of wiggle room, and let it kind of work. If price starts gaining either yesterday's high or Friday's high, price gains this anchored VWAP, if you're positioned far enough out in time, it won't decay too much on you. And yeah, that just gives price action time to work. I mean, it could come back up even into these old highs here.
So you're saying you aren't a big fan of the 0 days to expiration options?
I mean, with this type of idea, no, I wouldn't be. And that's only because whenever there's zero DTE kind of requires zero room for error, right? Like those options that we were playing on Friday during my stream, those Microsoft options, we were playing zero DTE, and the reason why is because we had this idea like Microsoft is just lagging. Everything else is working and Microsoft is lagging. They're gonna catch the bid on Microsoft. And it worked, right? Like we could be a little bit looser with our entry on that. With this, it's not. I don't really have like a good opinion about where XLE is going to go here, and because I don't have, or maybe not a good opinion, but I don't have a strong opinion. And since I don't have a strong opinion, I don't want to be playing it that close to the hip. I want to give it wiggle room. I want to give it time because it could gain. It could go back up to $75. And if it goes back up to $75, your 70 monthlies, or your 70 put a month out is going to draw down quite a bit, maybe 25, 30%, depending on how quick they get back there. If it does get back there, I think there's quite a bit more room for it to fail. But you have to kind of know where you are within the trend to be able to make a zero DTE type of decision, I think.
Yeah, and I don't know. I was talking about this earlier on the show, and I haven't bought any of these contracts yet, but just something I threw out there, something I may do, and I'm not obviously advising anyone else to do this because I want to be very clear that this is essentially a high risk lotto play. But I was saying especially if we keep moving lower on the Qs and the SPY, maybe even into tomorrow, that toward tomorrow afternoon would be very interested in looking at some like Q and SPY calls that expire on Wednesday, just in case we do get a lower than expected CPI print and maybe get a 2.5% rally and the SPYs or Qs on Wednesday. Then there'd be a lot of alpha in getting in some of those calls Tuesday afternoon.
I don't disagree with you on that. I think what you'd have to do, what you'd have to mentally prepare for, is to go to zero.
Oh,
So
100%. Yeah.
as long as you size that thing accordingly, sure, have some fun. I mean, I personally am still kind of on the bull side here for the SPY and the Qs. Not. I don't think we're going back to all-time highs anytime soon, but I think there's room. I think there's room for us to kind of gain. I mean, there is that big gap up that we do still. I mean, we don't have to fill it. Don't get me wrong. We don't have to fill it. We tried to fill it on Friday on the Qs, and then on SPY, it's still screaming. It's still right there. I personally am in the camp like I want to see 407 on SPY. I want to see like this range up here on SPY, and I want to see 305 or so, 304 on the Qs. Whether or not I'll see it, I don't know. But I mean, we failed. We haven't come back to test if all of this price action up here is going to act as resistance now. I mean, we're just kind of hovering. I mean, you could see kind of the trend area here. It's pretty clear. Like when we break below it, we stay below it. When we get above it, we stay above it. And price is just kind of jumping back, oscillating around this level. So I'm kind of a little bit more bullish here. We've got higher lows. We made a higher high on the Qs on Friday. I don't think we made a higher high on SPY. No. So we failed a new high on SPY. So that's a little concerning. I was listening to All-Star Charts Twitter Spaces this morning, and JC was talking about the kind of like the rising wedges that he's seeing everywhere. Everybody's kind of seeing these things, right? So the question is this is technically a bearish pattern. It technically probably should resolve lower. It's just a matter of what does it do to resolve lower? Does it ultimately kind of come up here and test and then, like a false breakout out of it? I try and think Max Payne, I try and think about like what will market makers do to suck as much retail in as possible.
Right.
And to me, most of retail is still really bearish, I think. just based off of, just random things. You see these people doing Twitter polls saying, is this week going to be green or red? And it's like 70% say red. All right, well, I want to fade that. I want to go long because the average person is saying that we're going to be red, but it's all kind of a big game of chess, isn't it? I kind of expect those CPI numbers to come off a little bit. I kind of expect them to be lighter than expectation. So if that's the case, like you said, maybe we do get this move back up into kind of this area that we need to go back and test.
Yeah, and like you said, I mean, and I've talked about on this show a number of times. I kind of compartmentalize, and I have my two different accounts, right? I have my like long-term Roth IRA where I'm basically a long-term buy and holder, and then I have my Robinhood account where I don't mind just like messing around some YOLO options, and it's completely separate in my head, and I have more monies in my long-term safer Roth. But with just a few $100 on Robinhood, I do like to mess around and make some of those kind of YOLO trades. So like you said, like I'm happy to weigh the risk and reward, pay a couple $100 for some out of the money calls on the queues that expire on Wednesday, buy them on Tuesday. And I'm honestly like, if I had to give them odds, I'd say like, oh yeah, there's a 70-80% chance that these expire worthless. But in that 10 to 20% chance that they don't, I'll make a lot of money and it'll be fun. And
Right.
so like, I think like you said, if you are looking to make a play like that, just be prepared for them to go to zero. And I also love, Jason, the idea of, you said like trying to foresee what would be max pain here. Like, would max pain be 3 more green days in a row on a SPY to get people really sucked in and start buying and FOMO buying, and then the market goes down another 10%? Maybe. Or maybe it's, everyone is short now, so then the market rips up another, 10%, so it's like you said, like trying to figure out what would max pain be, what will get retails hit the most, because it seems like at least that's what happens anyway. And like what you're saying, being going against the grain of what everyone in retail is saying, because like, Vegas casinos, the house always wins. So if everyone and their mom is buying puts on the SPY, that's not going to give me a lot of conviction that the SPY is moving lower, right? That's going to give me conviction that the opposite, that, okay, now's the time to buy. So I love that, kind of sound. I think that's a very sound way to think about and kind of strategize some of these things.
And I mean, you could do that here with your show. You could have a poll going that just says, are we going to close the week red or green? That would give you,
and then just do the opposite of what
that would give you a decent idea of kind of what's going on or what your viewers are thinking. Give your viewers a chance to understand what your viewers are thinking. I mean, I'm just kind of looking through the unusual options widget to see if there's anything big orders that have come in today. Looks like July 11th. What day is today? I don't have my phone on me, but today is the 11th. Yeah. So we've got 300. What is this? 300 puts, sweeps coming in, 3.2 million, 2.4 million, 2.5 million. You have to assume maybe this is the same buyer. And these are for the 300 put December 30th, 2022. So these orders haven't taken up a huge amount of the open interest. Maybe say 3, 6, 9, 18. 19% of the open interest, and it's like 5, 8, 10, 11, 12, 13, like 14, $15 million order for the 300 put December 22nd. What is this? Is this somebody protecting? Is this a hedge? Is this, you have to ask yourself those questions too. Are they selling these things to retail? Is retail coming in and just buying this stuff? I don't really know. But yeah, you look at the weight of the evidence, right? Like, and kind of trust your gut. My gut instinct is that we do push a little bit higher to kind of get more people who are on the sidelines or who are short, get them off sides, or get people long just to fake them out and take it another leg lower. I totally think we're going another leg lower. It's just a matter of kind of how that
now it's almost scaring me, Jason, how much I feel like you and I are seeing eye to eye right here, because I don't like it when someone else is agreeing with me, because I'm like, shoot, that means I'm wrong. But I completely, that's why I'm talking about getting into these calls tomorrow afternoon potentially, because like in the short term, I totally see us, potentially pushing up another 5% in the spies or whatever. But
Mhm.
I've been saying, I've said it on this show earlier before you hopped on, my prediction, and then no, there's no reason this is going to come true. I don't have a crystal ball. Otherwise, I'd be a billionaire. But my
Right.
prediction is that next leg lower comes, later in the month, that week of July 20th to 27th, when we get all these big earnings coming out from Apple, from Tesla. And it would make sense, like you're saying, for us to maybe even to chop or maybe even rally into those earnings to maybe get some more people suckered into FOMO buying. And then we get these, underwhelming earnings. And next thing you know, we're dumping another 5-10%. And then that might be our next leg lower.
Well, let's talk about banks. I mean, you can't talk about earnings and not talk about banks, right?
Yeah, that's this Friday, right? The banks
You've
come out.
got you've got the banks this Friday or this week. I don't know exactly the day. Maybe they all report on the same day, or maybe they report on different days. But you've got 2007 highs, you've got 2017 highs, and 2019 highs, and look where we got price right now. So we were It took us, 20 years or 15 years to break out of this. If you want to call this a base up here, you break out of these break into new highs. We're coming back, and we're testing them. This feels like a must hold area for banks as a whole. If we fail below this, that could be really problematic. But to me, it kind of feels like this should hold. It
Yeah,
took
and
us
I mean,
took us so many years.
that's what's so great when you zoom out on a chart like this and you get to such a pivotal point.
Right.
No pun intended on pivotal point, like talking about pivot points, but you got to decide, all right, now we're at this super important point. Are we going to hold and bounce, or are we going to break through? And on a chart like this, to me, there's almost more reward playing the downside, because then if you do break, it looks like, okay, then there's like a long way to fall, but it might be more likely that you hold and then move higher. So I don't know. So I just looked it up real quick. So on Thursday we have JP Morgan and Morgan Stanley before open, and then on Friday we have Citibank and Wells Fargo. So Thursday and Friday will be big days for the banks.
XLF holding its anchored VWAP from COVID low right now. So that's kind of interesting to see. I mean, XLF looks so much better than a lot of the individual names. Kind of like see what's going on with Bank of America here.
Yeah. Well, Jason, it is 1 p.m. This is when we wrap up the show today, but it was great to get you on. It's always good to get fresh faces on. We usually have Jake on every Monday, but who knows? Maybe we got to start getting you on it sometimes instead.
Yeah, man, I'm happy to come hang anytime. Happy to be here.
Yeah. Or we can find a different day that works for you in the week, so that way we can have you and Jake come on different days.
Yeah, for sure. Would love to do it.
All right, Jason. Well, enjoy the rest of your day. Let us know. Let the audience know where folks can find more from you. I'll go ahead and drop your Twitter in the chat.
Awesome. Yeah, thanks. So at Kretzky Trades is my Twitter. I host all things TrendSpiders. So on Tuesdays, I'm on Twitter Spaces doing the trade ideas. That's at 8 p.m. Eastern. Thursdays, I'm on YouTube doing the live charting show. We bring professional traders on. They take charting requests for an hour. That's also 8 p.m. Eastern. And then Monday, Wednesday, I live stream on the TrendSpider YouTube. That's at 2:30 p.m. Eastern time till about 4:30. And then on Fridays, we're trying out 10 a.m. Eastern time for live streaming. So I know there's a lot of dates and times. Hit me up on Twitter, give me a follow, and I always update folks with kind of the schedule for the week.
There you go. Link is in the chat. Jason, thank you again for hopping on today. Thanks for taking time out of your busy Monday to hang out with Benzinga, with Zinger Nation. Enjoy the rest of your Monday.
Absolutely, man. You too. Have a good one, everyone.
You too. All right, y'all. That was Jason Kretzky from TrendSpider. Twitter is in the chat. Go ahead and give Jason a follow there. That will be a wrap for us today. Thank you for hanging out with us on this beautiful Monday. We have Money Mitch coming up right now, so stay tuned. Money Mitch has a big show, Stock Market Movers. He'll be talking to Sean Cruz over at TD Ameritrade. Always a good guy to talk to, Sean Cruz. Then Brian Overby, the senior options analyst at Alley Financial. So again, make sure to hang out for Stock Market Movers with Money Mitch. This stream will automatically redirect you over there, so you don't need to go anywhere. Till then, stay green.